video is going to give you a bit of a look at my net foreign debt, and also what's by the term net foreign liability. So just a bit of a recap in terms of where we are at the moment. We've talked about the balance of payments and what that measures, the current account measuring all transactions with no future obligation, the financial account being used to fund the current account. Basically what happens is every time we run a surplus in the financial account, that surplus continues to accumulate and lead to more net foreign liabilities. Because a surplus in the financial account means that we are either borrowing or selling off assets, those transactions lead to a continual increase in our net foreign liabilities. So because the credits we receive from foreign loans and selling off equity outweigh the debits, it continues to increase our net foreign liabilities. So two key terms, whenever you hear the word net foreign debt, remember it's different to gross foreign debt. It's the result of Australia's total borrowing from overseas minus what we've lent to overseas. So it's not just the total amount of our foreign borrowing, you also have to deduct what we've lent to overseas countries. The term net foreign equity refers to Australia's the level of foreign ownership in Australian assets. So how much of our assets the foreigners own in terms of property and shares and businesses, minus our level of ownership overseas. In Australia at the moment we actually have negative foreign equity, which basically means that Australia's share in foreign assets actually exceeds their share in our different businesses and shares and so on and so forth. Net foreign liabilities is equal to the total of net foreign debt plus net foreign equity. So every time we run a current account deficit, it's our net foreign liabilities that increase because we can choose to fund that current account by issuing equity or by going into debt. And that's important to recognise that link. So if you look at Australia's net foreign liabilities at the current point in time, as you can see, of the total, it's basically all short and long-term debt. Equity is actually negative at the moment. So as I said, Australia's share in foreign assets is actually exceeding foreigners' shares in Australian assets at this point in time. When Australia runs a current account deficit, this means we're spending more than we're earning. So we must fund this shortfall by borrowing money or selling off assets. If we decide to sell off our assets, our net foreign debt will increase. Anything that increases the size of our current account deficit will increase the size of our net foreign liabilities. So when you're answering questions about how a high Australian dollar or a low terms of trade or reduced productivity will impact our debt levels, think about what it will do to the current account, and if it will increase the size of the current account deficit, then you just need to make that link that we will either have to borrow money or sell off assets, and then you can link it to our total level of net foreign liabilities. Types of debt. So you've got official government borrowing. So this is the government's borrowing. Generally, this government borrowing is associated with budget deficits. So if the government runs a budget deficit, that means in that year that their expenditure exceeded their revenue. And Australia has run budget deficits since 2008, so the last 9 years we've run consistent budget deficits. So generally around the figures of $20 to $30 billion. Basically what that's doing is it's continuing to accumulate, and therefore now public sector debt is over $300 billion. So the government owes over $300 billion to mainly overseas, but also to the private market. The public sector debt is government borrowing. Non-official private sector debt is the debt of the private sector. Most of this debt is owned by large companies who basically need money to grow, and therefore they borrow from overseas to get the actual capital they need to expand and start their business. It's also increasing because banks are continuing to have to borrow from overseas to fund housing loans. So when people are getting these loans from the banks, they're having to take out big mortgages that the banks don't have enough savings to meet, and therefore they're borrowing from overseas as well. So most of Australia's net foreign debt, about $700 billion of the $1 trillion of our debt, is non-official debt. Government debt is only about 30%, and that's the $300 billion that they owe. In terms of reasons our debt is so high, so the main reason is that, one, we consistently run current account deficits. So every time we run a current account deficit, the government must borrow money or sell off assets. That leads to generally higher levels of net foreign debt. Other reasons is the continual budget deficits. As I said, over the last 10 years, consistent budget deficits every single year continues to increase the government's level of net foreign debt. Other reasons we have a high level of debt is that we have a lack of national savings. So that means that when people are borrowing to buy houses, the banks don't have enough money to fund that, and they're borrowing from overseas. So that lack of national savings is also increasing our debt levels. And finally, Australian interest rates are relatively higher. So there's opportunities for foreign investors to lend Australians money, knowing that we're willing to pay a higher rate. So Australians are often choosing to borrow abroad because they can get it at a cheaper rate, and that's leading to higher debt as well. So they're the main reasons our debt is increasing.